thanks for having us, Dave, and thanks everyone else for coming out to listen to the Consolidated story. We are a global uranium developer with a focus on near-term production in the United States. Just want to take the time to look at this slide. We've got a great image here. This was taken actually from the just outside the portal at our Tunney project in Utah. On the left-hand side of the slide, you can see the ore bays, pretty substantial in size, and then drifting out to the right, you can see our substantial surface infrastructure that we've got on site. We've got a disclaimer here, and we will be making forward-looking statements. So as I said, we are a global uranium developer with near-term U.S. production potential, and what's important to note here is that we're well funded to execute in the current market. We've got the right strategy. As Ross was saying, uranium has really, come on from a 10-year bear market and starting to advance. Just a few years ago, you saw the price of uranium sub $20 a pound, and we're sitting at north of $50 today. And we believe that certainly there's room to grow, and I think the market believes that too. This consolidation strategy that we've employed, it has generated outsized returns in previous markets, and it's worked well for our shareholders, and we believe it's going to continue to work well for our shareholders in the The company is not only focused on growth through acquisition, which we've started out to help develop the company, but we've now started to focus on project advancement to get some value from the projects themselves and boots on the ground approach to growth here. We've got the right team. The company was put together and founded by those behind NextGen Energy and Mega Uranium. You might know Lee Currier and Richard Patricio, along with Phil Williams, who's sitting in the crowd here today. So a well-experienced team, did very well in the last cycle, and we see certainly that we believe that that'll continue as we move forward. And Phil's put together a great team. We're very well experienced in project development, uranium, project evaluation and management. So we've got a team that's got a great background, not only in the financial space, but we've got a great technical team on the ground here in Toronto, in the United States, down in Argentina, and also in Australia. And we've got the right assets. We look at single asset or single jurisdiction companies, and certainly there's a risk element there. And this is an opportunity for us to diversify a portfolio and avoid that single jurisdiction risk. We've got a portfolio that's diversified across geography, stages of development, and project types. So all of our assets are located either in top mining or uranium jurisdictions. And we've got a set of U.S. projects that we acquired from Energy Fuels in 2021 that are very well positioned for rapid restart. They're fully permitted, and we're advancing those projects. Just a quick snapshot of the company. So we've got a pretty tight share structure. We're under 100 million shares outstanding. Fully diluted, we're about 121 million shares. Market cap of about $150 million. And we've got about $20 million in working capital to help us advance our strategy. And thanks, Dave, we're covered by Red Cloud Securities at $5, and we're sitting at about we've got a target price of $5, and at a current share price of about $1.50, we've got lots of room for growth. Our largest shareholders, Energy Fuels, holding about 17%. Energy Fuels got this position through our acquisition of their projects in Utah and Colorado. Strong holding by management, and then we've got a number of other funds rounding out Sachem Cove, Mega Uranium, Sprott, and a number of other mining funds with decent positions, and we've got a very good holding of retail shareholders as well. So in terms of sector expertise, as I mentioned, Phil was one of the founders of the company. Phil's got a lifetime in uranium experience from starting out as a research analyst, banker, fund manager. He understands what's going on here. He was one of the co-founders of Uranium Royalty Corp. And then Phil was, talking to Lee Currier and Richard Patricio, and they just felt it was the right time to put this company together. I joined a little over a year ago. My background, I'm a mining engineer. I've worked, at all stages from project grassroots exploration right up to putting mines into production. And I've also spent a number of years in investment banking, including a number of years as a director at one of the largest Canadian investment banks. Then we've got, as I mentioned, a great team on the ground with Pete Mullins, Paul Pearson, a terrific board of directors, and I'll point firstly to, primarily to Mark Chalmers right now. Many of you might know Mark as the CEO of Energy Fuels. Mark found it was important to join the board just to show the commitment of EFR to our strategy. We've got a very strong advisory board, and I'll point out our most recent addition, that is Tracy Primo. So Tracy is truly an expert in nuclear energy. She spent her entire career with OPG as a nuclear operator. She now sits on the board of OPG, and she's a very proud member of the Nipissing First Nation. Tracy has joined us really to advise us on our strategy of community consultation and consultation with First Nations. And so we're very lucky and very proud to have Tracy join our team. So this slide, I think, does a really good job of showing who we are and the diversification of the company. We look at the resource for one. We've got, including historic and current, we've got about 270 million pounds of uranium on the books, and then another 90 million pounds of vanadium. We've got the current resource that we recently put out an updated resource at our Tunney mine in Utah, and then the rest of it is, as I say, is historic. And what's important to look at here is the diversification of us geographically. We've got our projects in Canada, United States being our key focus right now. We've got Argentina and Australia. And when we look at going or acquiring new assets and we look at jurisdictions, there's a number of key points we want to check off here. Is this a jurisdiction that is, has got a strong history in mining? Are they supportive of mining? Is it politically stable? Do they have a history in uranium mining? And we look at their power grid, and do they generate any of their power from nuclear energy? And ticking a few of these boxes is very important to us. And if you can tick about 3 of them, that's a pretty good deal for us. I just want to also point out the one project here, Kohls Hill, just down in eastern U.S. That is our most recent acquisition. That is a 160 million pound historic resource, really in the heart of the U.S. This is a recent slide that we put together, and I think it does a really good job also of just showing our strategy and how we view our projects. We've got what we call our long-term call options, our medium-term exploration and development projects, and then our near-term production potential projects. And it's those near-term production potential projects that we're spending the bulk of our time on. Those are U.S.-focused assets. We've got the Tunney mine, Dineros mine, Rim mine. Those are fully permitted mines, all within trucking distance of the White Mesa mill that's owned by Energy Fuels. We have a toll milling agreement at that mill. That is a fully permitted operational uranium mill, the only fully permitted operational mill, hard rock uranium mill in the United States. So that really gives us a competitive advantage to getting into production with the permits and the mill. We look to fill that basket of near-term production, and that comes really out of the medium-term exploration and development. We've got Australia, Argentina, and our non-core U.S. assets, and we are starting to do some work on the ground. We've been doing a little bit, and we're going to progressively expand the work program at those projects. And as those advance, we can either move those into the near-term production potential. And we are a very pragmatic group. We're not married to any one project. What we look at really is trying to add shareholder value, and that's what we'll continue to do, and that's what this company is about. And if there's a way to add shareholder value, and maybe through rationalization of the portfolio, potentially creating another spin-out like we did with Labrador Uranium, which was essentially a dividend to our shareholders. We were able to take an asset that wasn't getting the attention it required in our portfolio, put it into its own public vehicle, put those shares directly into the hands of our shareholders where they could make a decision if they wanted to continue along and see the growth of that asset, or if they wanted to sell it in the market and take a cash position. And then we look at our long-term call options. And those are our Kohls Hill and our Matouche projects. And really, without any arm waving, we could say those are world-class deposits. And if we start to get some traction on advancing those would be a real game changer for the company. And you would see significant growth in the value of the stock. And as I said, we're a very acquisitive company. We've been doing a lot of M&A, and we'll continue to look at opportunities. And we could fill any one of these buckets through additional M&A. So we talk about near-term production potential in the U.S. We do have three fully permitted mines that we are working on. We are currently still drilling at Dineros. We completed a 43-101 resource at our Tunney M mine just this past year. So we updated that. We're sitting at roughly 9 million pounds of uranium there. Turns out there's substantial upside in terms of the vanadium, and we'll continue to work the project going forward for the vanadium. We're looking at a very large work program that we're currently putting in place and expect to move forward with this year. And the U.S. is very important to us. I mean, it's really turned around in terms of the attitude that they have towards nuclear energy, and they're looking for a homegrown supply of uranium. A lot of their production comes out of Russia and Kazakhstan. They're looking at what's happening currently in the world market in terms of energy. And there's a lot of politicians and there's a lot of the population saying, we need to be able to supply our nuclear reactors. 30% of our energy comes from nuclear. We need to have uranium coming out of the States. They currently produce about 0.1% of the global uranium and consume about 30% of it. So these are historic mines in a fantastic jurisdiction. There's been about $100 million spent on CapEx on these projects. Currently, that would be a lot more in today's dollars. I talked about the 43-101 resource we've got at Tunney M. We're going to continue to advance the projects at Dineros and RIM. These are fully permitted projects. This would take 3 to 5 years to get these projects permitted, to get any project permitted in the States, which gives us a significant time advantage and at a substantial cost savings. And again, that toll milling agreement with Energy Fuels. So if you're not Energy Fuels and you don't have a toll milling agreement with them in the U.S., you don't have access to a permitted operating mine in the United States, and this gives us a significant advantage. So we've talked about that drilling program at Tunney M. There will be lots of surface drilling. We're going to open the portal. We're going to get under. We're going to sample the ribs and continue to advance the project. So just in terms of our medium-term exploration and development, we've got the project down Laguna Salada down in Argentina. This was a project that historically had about $15 million worth of expenditure on it. We were able to tuck it in for under $2.5 million, so it was a great acquisition for us. Argentina is a mining-friendly country. They've got nuclear reactors, so it's a great place for us to do business and continue to advance. We are doing some work on the ground there now. And then in Australia, we've got Ben Lomond and Milo, and in addition to that, we've been able to really build up a critical mass. A lot of people don't know, but Australia is one of the key producers of uranium globally, and we've got a fantastic portfolio down there that will continue to advance. And then talking long-term call options, Kohls Hill. This is the project that we acquired in Virginia. This is a 160 million pound deposit. The Kohls Hill deposit is located in southeastern or southwestern Virginia. Virginia is home to 4 nuclear reactors, home of the nuclear naval fleet for the U.S. Navy. Significant infrastructure in place. Over $100 million was spent on this project. We were able to acquire it for $40 million. The governor of Virginia said they're all in on nuclear going forward. They want carbon-free power. This is enough uranium to supply the reactors in Virginia for 80 years. So enough to really keep them going and be solely sufficient. Matouche, a very high-grade deposit. This is is the highest-grade deposit outside of the Athabasca Basin. You know, sitting at approximately 1%, or equivalent to, if you're a gold bug, equivalent to about a 17.5-gram deposit. Grade is king, as we've heard. So this gives us, 3 of the largest or highest-grade uranium deposits out there. This is a project that has had over $120 million spent on it. We were able to acquire it for $10 million. And again, Quebec is a very pro-mining jurisdiction. If we're able to get some traction here, this is going to be fantastic for us. And you'll really see a lift in for our shareholders. Now, in terms of competitive landscape, there's a lot going on in this slide. We look at ourselves, we're looking at about a 40-cent per pound EV. And when we break up our portfolio across the different jurisdictions we're looking at, we don't even come close on either an explorer basis or an advanced developer basis to the average of what other guys are getting in terms of value. So as we continue to rationalize and explore and develop our projects, we're going to continue to advance value for our shareholders. So just to summarize, we've got an attractive portfolio of uranium projects. We're in top-tier jurisdictions. We've got large and high-grade projects on a global scale with significant past expenditures, near-term production potential in the U.S. We're always evaluating new opportunities, and we've got a fantastic team to help us do that. We've got a diversified portfolio approach, and we're very flexible and in terms of our option structure, and very creative. We've got a very compelling valuation, as I've laid out. We're well funded to execute our strategy, and we've got a proven track record, and we've got the team to move this story forward. I think I'm just about out of time here, but if maybe I can answer a few questions before I get hustled off the stage.